Where is the parabolic phase of the cycle? Because in 2020, at this same point in the cycle, we'd already be in the parabolic phase. In 2016, it's the same thing as well. We were only confirming a breakout from this reaccumulation range in 2016 to confirm a transition into the parabolic phase of the cycle. So where is that phase right now? We'll be talking about that in today's video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So Bitcoin has been enjoying a extended reaccumulation phase of 182 days after the halving. And in the past, we'd see Bitcoin actually break out from its reaccumulation phase 160 days after the halving. So what's going on? How come we've extended by 20 days already? That's already a 3-week increase in terms of almost 3 weeks in terms of this reaccumulation phase. And why is that happening? Because going back even to 2016, at the 160-day mark, we'd broken out and we overextended briefly before pulling back into the top of that reaccumulation range before successfully retesting it just to confirm this as a full breakout, really, before trending upwards and fully transitioning into that parabolic phase of the cycle. At this moment in this cycle, we're extending overall. But part of that is because we saw pre-halving heights never ever seen before. We saw new all-time highs in Bitcoin's price action in the pre-halving period, and we never really saw that in 2020. We never really saw that in 2016. It's never really been done before. And when we rallied to new all-time highs in the pre-halving period, we were already accelerating in the cycle by approximately 260 days. And the thing about this right now is that we've reduced that acceleration to approximately 2 months. So that just gives us an idea that we're still accelerating in the cycle, no longer 260 days, but we've reduced that acceleration through this reaccumulation phase. We've successfully reduced that rate of acceleration to a lingering 2 months, 50 days or so. So we're still ahead of schedule in terms of historical cycles, because we are still accelerating in this cycle, and this lingering acceleration, perhaps Bitcoin is trying to level that out to zero, because if we do, that will mean that we'll have a historically typical cycle. And what this translates into is that we'd have a parabolic phase in the cycle that's going to be approximately equal to what we've seen in the past. So by reducing this rate of acceleration, that means we're not going to get an accelerated cycle. We're not going to peak in the bull market quicker. And if we can reduce this rate of acceleration to zero, that will mean that we can peak in October 2025, September 2025, and have a normal bull cycle. So the fact that we're slightly extending here in this reaccumulation phase doesn't necessarily mean something negative, because we're already technically accelerating in the cycle. So we're just going through a cool down period right now. And of course, history did suggest to us that we'd be breaking out from here 160 days after the halving. But in 2016, actually, we broke out 155 days after the halving, and then it took a few more weeks to retest the top of that range to fully confirm that breakout. And then it took a few additional weeks before we actually broke these highs right over here. So 2016 showed us that before really transitioning into that parabolic period, and of course we saw a dipping period here as well for multiple weeks, before we really dipped transitioned into that parabolic phase of the cycle where we saw uninterrupted uptrending for the most part, it took a bit of time to really start going, because here it was very seamless, very clear that we're just going and dipping very briefly and experiencing very few dipping moments on the way to new all-time highs. Whereas 2016, it took a bit of time to get going, and in 2016, it took 155 days after the halving to break out. It took 163 days after 2020, after the halving, to break out. And that's already an extension by 10 days or so. So are we seeing an additional extension by an additional few days on top of the 2020 post-halving breakout point in this cycle as well? Are we seeing a natural extension in terms of the reaccumulation phase in the cycle? That's also something to consider. And it's this sort of theory that would actually really aid in reducing the lingering rate of acceleration in this cycle already, and which is an accelerated cycle. So this cooling down isn't negative for the overall cycle. It's actually a positive that we're reducing the rate of acceleration to zero, even if that means that the reaccumulation phase is a little bit longer. But what we're looking at in terms of the reaccumulation phase is the fact that we've ended this bargain buying period, so downside deviation below the reaccumulation range low, and the reaccumulation range low is actually 60,600. So we've broken back into the range, and we've been retesting this range low as a support for 2 weeks in a row now. And we've not just been retesting the range low here as support, but we've been doing the same with the 21-week exponential moving average, which is a typical bull market EMA, which price tends to hold as support to support essentially the bull trend. And we've been seeing a lot of deviation below both the range low and this overall 21-week bull market EMA, but we never really lost the 50 EMA. And the 50 EMA is that sort of confirmation point. If we lose that, then it's actually a moment to consider pondering the beginning of a bear market. But we've never really had a bear market occur this soon after the halving, so that was always out of the question. Nonetheless, we are seeing a successful retest for 2 consecutive weeks of the range low of the reaccumulation range, and also that confluent area of support around the 21-week exponential moving average. So solidifying a base right over here is going to be quite important in providing expansion across the overall range to try and challenge for 71,000, the range high here, for a break into the parabolic phase of the cycle. So if we look at this, for example, this weekly close and then this retest, that enabled a move into the reaccumulation range high. And holding here for 3 weeks in a row also enabled expansion into the range high. So we're seeing an amalgamation of both of those instances where we've broken back in, we're retesting this for a few weeks in a row, and we're trying to position for a move towards the highs here. And of course, we have a series of lower highs to contend with, but once we break those series of lower highs, and there's a good chance we'll do that in the next few weeks, then we'll actually revisit this all-important resistance for a challenge to finally transition away from the reaccumulation phase and into the parabolic phase of the cycle. So the question isn't necessarily, wow, how much longer can this reaccumulation phase go on for? Because we've seen that this is the most historic reaccumulation phase of all time. It's been going on for almost 8 months now, whereas in the past we've only seen very brief multi-week periods of sideways price action before rallying to new all-time highs. And in 2017, this is second place in terms of length, and it's also very zigzagging in a sense of reaccumulation. We've never really seen picture perfect reaccumulation until really now, if we're thinking about it, because this was very brief reaccumulation, this little to no reaccumulation, and this was also reaccumulation, but not in a sideways picture perfect typical range bound construction. So this is the first time where we're seeing really this being the range high, that being the range low, and it being kind of boxed in a very neat and tidy way. So the question isn't how much longer can we see this reaccumulation phase go on for. The question is how much longer will we rally in the bull run and in the parabolic phases of the cycle once we break new or at least old all-time highs. And in this 2013 cycle, it took 270 days before we peaked in the new cycle, in the new bull market and bull market peak in 2013. And here, and as you can already see, we're seeing diminishing returns in every cycle. It took 252 days beyond breaking old all-time highs and rallying to new all-time highs. And in this cycle, once again, diminishing returns quite considerably, but it took 330 days until we rallied to new all-time highs and that final bull market peak after breaking these old all-time highs. So the question is, are we going to see 250 to 330 days of parabolic uptrending in Bitcoin's price action? And at which point shall we really start preparing for dollar cost averaging out of the market and having those profit taking strategies in place? And 250 days after we break old all-time highs, well, that's going to be the earliest moment to be considering exiting the market. And at most 330 days after the halving is when that moment should probably come. So we'll have a 80-day period where it's going to be really risky to be holding digital assets as a whole. But that's a story for another day, because we haven't even broken old all-time highs yet, but that's just a matter of time. So if you want more insights like this, feel free to subscribe to the channel, but of course sign up to the free newsletter in the link in the description down below. Click that link if you'd like to be on top of the market in terms of analysis like this, level-headed insights, data science, every Monday, Wednesday and Friday. Click the link in the description down below to sign up for free. And of course, subscribe to the channel, like this video if you enjoy content like this going forward. And that's about it for today's video. Thank you so much for tuning in. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.